Hey everybody, what's up, how's it going? Welcome to today's video where I will show with you guys my top 3 best dividend stocks in Canada. So dividend investing is one of the best long-term strategies for investing into the stock market. If you are good at identifying good solid dividend growth stocks and stocks that have good solid dividend yields, you can expect good solid returns in the stock market over time. And these 3 stocks I'm going to share with you guys today are some of the best Canadian stocks, and you really can't go wrong with investing into them. And before we get into the video and I share with you guys what these 3 stocks are, what I want you guys to do is let me know in the comments section right now, let me know your 3 top picks for Canadian stocks. Before watching the video any further, leave 3 stocks that you think are the best and leave that in the comments section right now. And while you're there, be sure to give the video a big thumbs up and subscribe to the channel if you guys want more Canadian-based dividend content. So my top 3 stocks for this video are going to be Canadian Utilities, Fortis stock, and TD stock. And I'll talk more about these stocks in just a second, but one thing you definitely want to do is if you guys have a tax-free savings account, be sure to stick these 3 stocks into your TFSA. Remember, the tax-free savings account is perfect for dividend stocks because any gains Remember, the tax-free savings account is perfect for Canadian stocks because any gains, whether it's stock appreciation or dividends you earn in that account, will be 100% tax-free. So if you are a beginner and you're getting started with investing, one of the best things you can do right now is to stick these stocks into your tax-free savings account and max it out as quickly as possible. Alright, so let's talk about my first stock pick, Canadian Utilities. Canadian Utilities is one of Canada's largest energy infrastructures. So Canadian utility stock is currently trading at $34.38 per share in Canadian. And at the time of this recording, Canadian utility stock has a dividend yield of 5.07%. When addressing their payout ratio, we can see that their payout ratio over the past 12 months has been around 56%. This is how much of a percentage of their profits are being paid out to shareholders in the form of dividends. And based on this year's estimates, that's going to rise to 77.3%, and on the overall total cash flow, this is about 46%. As you can see, Canadian Utilities has a nice solid dividend yield and a nice solid payout ratio, which combined together guarantees a nice stable dividend yield and some good solid dividend growth going into the future. In fact, Canadian Utilities has some of the best dividend growth in the past as any other Canadian stock out there. In fact, even though Canadian Utilities is a dividend stock, they have some of the biggest growth and appreciation of all Canadian stocks out there. Over the past 20 years, Canadian Utilities has an annual growth rate of 6.6%. Now that's pretty huge for a high yield dividend stock. And over the exact same period, CU has also increased its dividend by 7%. So solid stock growth and a high dividend yield and consistent dividend growth makes Canadian Utilities one of the best Canadian dividend stocks to buy right now. Earnings have also been pretty stable for the start of 2020, which as we all know has been a pretty crazy year so far. So overall, I think Canadian Utilities is one of the best dividend stocks and dividend growth stocks to buy right now. The second stock I'm going to talk about is Fortis. Now, I've talked quite a bit about Fortis on this channel before, and that's because I really do truly think that Fortis is one of the more stable and best energy stocks to buy right now. And Fortis is truly one of those dividend stocks that you just buy today and you really just hold it forever. Fortis stock has grown by 2.1% so far in 2020, and its shares are up over 8% year by year. So as we can see, Fortis is doing a pretty good job in the past and currently is doing a pretty good job throughout this whole entire pandemic. In regards to earnings, Fortis has reported a net earnings of $312 million just in the first quarter of 2020 alone. Now the nice thing I really like about Fortis is that they provide a lot of essential services. So even though the pandemic has hit the stock market pretty hard, Fortis has managed to survive and just continues to keep doing well despite everybody else suffering and having a difficult time. If you want a nice defensive dividend stock that's going to see growth and capital gains and dividend growth going into the future, I think Fortis is a great stock for you to add to your portfolio. Fortis last increased its dividend in 2019, and its dividend currently represents around a 3.5% yield. You can currently buy Fortis at about $54.75 per share in Canadian right now. And in regards to dividend growth and cutbacks and all that kind of stuff, I don't think we really have to worry about any of that stuff when it comes to Fortis. And the reason why is because Fortis has increased its dividend annually for the past 47 years. I don't know about you guys, but I think that's the definition of long-term dividend growth. And the reason why Fortis has been able to do this over the past little while is because they have a nice dividend payout ratio of only 50%. And this is over the past 12 months. Keep in mind that over the next, towards the next year, that is estimated to increase to about 64%. But that's normal since everybody is currently reporting losses and currently is paying out more of their earnings in dividends as a result. And based on their cash flow, that's 300%. So we can see here that that's pretty high based on their cash flow, but they still have a lot of earnings coming in, so I'm not too worried about that. And Fortis is well on its way to becoming the very first dividend king on the TSX. As of right now, you really can't go wrong if you invest into Fortis stock. Now my third stock pick for this video is going to be none other than one of the best, if not the very best bank stock in Canada, and that is TD, or Toronto Dominion Bank. TD is by far my most favorite Canadian bank stock, and I love it because it does a lot of business not only in Canada, but also has a strong footing in the US. TD offers a wide variety of financial, insurance, and investing services, and all kinds of cool products like that. So one thing I want to mention really quickly here is, although TD, just like any other Canadian bank stock, got hit pretty hard during the pandemic, and currently as of right now is suffering some pretty big losses. And although TD has reported some pretty solid losses this year, I do believe that they are built very well and very well capitalized, that they'll be able to weather this storm that's going to be coming over the next little while. As a long-term investor, I think TD stock is one of the best Canadian bank stocks to invest into right now. So we look at the price of Toronto Dominion Bank here, we can see that it's currently trading at about $61.68, and this is down quite a bit pre-market crash levels. We can see here that it was trading at about $75 Canadian before the crash, and then it took a big little dump here and then slowly kind of rose up to about $61 Canadian as of right now. And the dividend yield for TD is currently sitting at about 5.12%, which is pretty good for one of the Canadian banks. And the best thing of all about TD that I like is the fact that they have really good payout ratios and earnings. They have an annual dividend of about $3 Canadian here, and their current payout ratio for the past 12 months is around 52%, which is pretty good for a bank. And based on this year's estimates going into the pandemic, their payout ratio is only sitting at 52%. So that's barely even anything of an increase here. So they still have good solid earnings, they still have a good solid payout ratio, and when it comes to their overall cash flow, that's only 1% of their overall cash flow. So I think TD has tons of room for growth, and I think it's one of those stocks that is definitely going to maintain its dividend and has lots of room to grow its dividend over the next couple years. So as of right now, I currently think that Canadian's top bank stock is heavily undervalued. And if there's going to be one Canadian bank stock that you buy right now, I would highly recommend that you guys go with TD. Alright guys, so that's it for this video. Hope you guys enjoyed my top 3 best Canadian dividend stocks to buy right now. Let me know what you guys think in the comments below. Let me know what your top 3 picks will be, and be sure to give the video a big thumbs up if you enjoyed it, and be sure to subscribe to the channel if you guys want more Canadian based content. Thanks for joining me here today guys. Have a good day, and I'll see you guys later.